So again, I appreciate everybody for coming. Obviously, we've got some forward-looking statements in here, so under our rules, if, please have a look at CDAR for any of the filings and public information. What we have under our company and our brand, so this is our structure on how we work, but CanadaBis Capital is the pubco. We have our production facility, which is our Stigma Grow facility, which is our test pilot for profitability in the cannabis space. We have retail locations under indicative collection, and then we have our brands. So some of our brands are Dab Bods, Black NGL, White NGL, and High Priestess. The fun stuff. Some fun financial information. So again, like I said, we really focused on pushing profitability out and proving that profitability is possible in cannabis. It's just another consumer packaged good. We have to listen to the customer. We have to understand what the customer wants and get that feedback back, and then produce our product lines to suit. What we want doesn't always reflect what you guys would want or what our customers would want. So that's translated into some pretty decent numbers. Obviously, you can see our net income. I'll show you a growth chart here in a sec, but our net income Q3 was 1.2 mil, just EBIT at 1.5, and our gross revenues were pushed up to 9.5. Not huge numbers, but again, we're pushing for bottom line. So that's when the gross margins start to play into that 2.7, and lo and behold, our test pilot's starting to work. So we've seen a 900% growth over the last, I'm going to say 6 to 8 months now, depending on the slide. I think it was in August, but so from 3 cents, we were profitable. We've been profitable for close to 2 years now. It's really taken off in the last 6 to 8 months, where we're getting some eyes on back on it without taking that negative stigma away from the large cannabis companies that want to lose $300-400 million every quarter and then go out to everybody and ask for more money, which is very frustrating. So that 900% growth, I think, we've seen that across the board, and it's looked, we're happy with that. We're happy with that model working out. Revenue growth rate, obviously 122% in Q3, sorry. Quarterlies, as you can see, we've really pushed that growth out. Our Q2, we had a larger jump in there. I really want to sustain, as per our model, that 5 to 10% quarter over quarter growth and really have that strong hockey stick effect. We couldn't hold back. Our product lines were pushing out too fast, too far. The customers were really giving us good feedback, so we let it go a little bit and seen that larger jump. Now we're continuing on our path of 5 to 10% growth quarter over quarter. That's translating obviously into what we're seeing on annual results of close to doubling or more consistently year over year, and obviously with the bottom line as well. So we were in the negative in 2021, 2022, 2023, we're positive revenue. Positioning, CanadaBis Capital, obviously publicly traded company. We are in the midstream, what I call the midstream cannabis side of it. So we're not a major producer of product. We actually buy a lot of our products. We have 9 major partners across Canada. We use inputs from strains and products that we give out and come back to us, and we process those in-house, and what we make is value-added goods. So we make infused pre-rolls, concentrates, oils, edibles, vape carts, across the market. We're sold nationally. We really want to be a leader in that mid space. We've got flower on one side, we've got concentrates on the other, and we really play in the middle where we've got that nobody has done before. We've got a middle space where we've connected both those users from the flower side and the concentrate side to give them a higher potency, higher flavor, higher terpene content, and really has worked out well. It's been reacted. We've been copied several times. Competition's always good, but that's the market space is growing. I think the infused pre-rolls are close to 27% across the market space now. Again, we see a large growth. 40%, we're Alberta based, so we've got a really good foothold in Alberta. 24% of both in Ontario and British Columbia is of our overall business. And surprisingly, Manitoba. People like their weed in Manitoba. long winters, I guess. But we really have a good, strong brand positioning in Manitoba. Ontario is actually 53% of the market space. So we have a good growth potential in Ontario. We've doubled our boots on the ground over the last 3-4 months with sales staff in Ontario to push that market forwards. So we're trending upwards in Ontario. Lots of cases sold. So we've sold 1.7 million units sold, 147,000 cases. That was up till August. And that's a whopping 8.9 million grams. I think Pablo Escobar is probably liking his time at 8.9 million grams. It's a lot of product. If you can imagine, we bring in about 40 kilograms, 40,000 kilograms, sorry, on an annual basis. So we're pushing truckloads of product in, processing it just like you would any other product, and kicking out as a value added. Growth market segment. So we've, again, 2% is currently what the overall concentrate space is, but you infuse that together, flour's about 40%, now the infused pre-roll line's about 27 to 28%. That wasn't existing a year and a half ago. This infusion line, the concentrates infused flour, it was zero. So we've got a huge growth going on that 27%, and it's really taken off, and it's holding. Historical results, I guess Saskatchewan, Manitoba are our weakest link. Basically, population growth, population density, Saskatchewan, Manitoba, there's still a lot of black market activity in both those provinces. We've recently launched another 49 SKUs across Canada. I think we're over 89 SKUs active currently in the space, 9 of which just went into Ontario last week. So every product call, every time Ontario is taking more and more SKUs, so we're going to see a decent amount of growth there. Case sales by province. Production rates. So we're seeing obviously a large volume in Alberta. We see some British Columbia and Ontario being very similar. Ontario is a little bit more, but when we say it's the overall percentage of our revenue, we take a discount. It's actually harder to sell in Ontario than it is in British Columbia. Again, our brands that we push out consistently, Stigma Grow, we have our more of our medical lines, more of our back to grassroots lines, so our RSO soft gels, Phoenix Tears. They've been in the illicit market for 30, 40 years. People have been doing these products. It's nothing new. However, we decided to bring those into the mainstream market, mainstream retail, so we can help people sleep. We can help the elderly with mobility issues. We can actually, if you look it up, it's actually phoenixtears.ca has an amazing story on cancer. We can't claim we're curing cancer because we're not. However, it does seem to help people on the full spectrum side of things. And there's only 4 companies in Canada that can really push out full spectrum products. DABUDS is more of our fun play on the product line. It's our mid-tier or our core group. That's where our infusions come in. Fusions, Moon Rocks, high potency, not for everybody, but it's a very high potent, high terpene profile product line. Concentrates are live resin vapes. Funny story, Health Canada's going to start slowing down on the flavoring agents. So a lot of our competitors have flavoring agents in their vape carts. A lot of the states had polypropylene glycol. We've actually developed a true product, a live resin product that has no added agents, no flavoring agents, true terpenes from the cannabis plant that really provide that holistic feel. We're not going to get popcorn lung. We're actually going to have some other entourage effect with all the terpenes and cannabinoids that are in there. Shatter Vapes, Super Slim Darts. We're one of 4 people in Canada that can do cigarette style products. We're actually a true cigarette machine right out of Virginia. Philip Morris uses the same machine to produce cigarettes in Virginia. It's very unique. It's been customized to our product and our product type. It's taken about 9 months to develop. We've been in market for just over 2 months now, 2 months, yeah, with those super slim electric style darts. And then milled flour. High Priestess. High Priestess was actually our female brand. It was developed in-house with 6 of our female cohorts. They're completely organic. Everything that's in there is organic. They really felt that they wanted a organic profile, that the girls really wanted to put their own product together. And we let them do it. Actually, one was my wife, believe it or not. She's a huge supporter. She works within the company, but she wanted a lineup that was truly organic. So they developed High Priestess. Black and White NGL is a little bit of a throwback to my oil and gas days. NGL is obviously a product line. We use butane to extract all of our products, so natural gas liquids. Some people say it's not going to lie. There's lots of other acronyms for it, but that was our little cheeky branding for those ones. Stigma Grow, obviously you can see a little bit of the facility, some of the stuff we do, our brands continued. Dabod's, same idea. High Priestess, this is some of the product types from the High Priestess. They went into a more bougie, higher end, expensive product, hardware for all the vape carts. Black and White NGLs. Our uniqueness, what makes us unique? Transparency, I guess, is one of our first. We believe everybody should have the right to fit products for their needs. Not one product fits all. Availability, again, we're a family-run, family-focused business. Strategic growth at a slow rate, but steady rate. We're not looking for the next big thing and then crash 6 months later where we don't have any backup for that. A lot of companies are coming out with, the next big idea and put all their money, all their dollar into that, and they crash. We've seen that time and time again in the cannabis space. We want that slow, steady trajectory upwards, so that it's a safe investment. I guess I'm heavily invested in the company. That's looking after, looking after myself and my fellow shareholders as well. We don't want to see a crash on this. We want to see that slow growth. Agility, we're small enough that we can listen to our customers. We can get that feedback back immediately, and we can really pivot on a dime. We're not huge overhead. We don't have to take 10, 15 months to bring a new product line out. If one of my employees has a really good idea in a product, we run it down to the end, and if it fits, and it fits one of our brands, we produce it. There's been several ideas, probably 15-ish, I think, that have come directly out of our meetings from our employees. Product ideas, product lines, strains. Availability, again, we're sold nationally. So we've been to over 3,000 stores nationally across Canada. And then agility. So the way we extract our product and the way we bring in our inputs is we're available to make about 20 different variabilities within the same product. So it can go into vape carts, shatters, waxes, diamonds, a whole plethora of outsourcing product lines from one input material. So the way our marketing team does it is they'll bring a whole lineup of the same strain across. So they'll bring it into vapes, they'll bring it into some flower, some of the live carts, some of the infusions, they'll bring it across. So you actually have a choice. So if you don't like smoking, you like vaping, or you like an edible, you have that same strain across multiple lines. What does the future hold, and what does all that mean? That's all great and fine and dandy. Yeah, we got one company, yay, that's good. It's a proof of concept for us. We can prove that cannabis can be profitable and how it's going to be profitable. So it provides us with the opportunity to acquire, partner, do some M&A activity with some other undiscovered private or public companies, and there's several out there. We're not the only ones that are in the space that are, I'm going to say, virtually undiscovered. There's some companies that are asset light, they're undervalued currently, and have little to no debt. There's a lot of them that have all that, but they have 30, 40 million in debt. We're not looking for those companies. We're looking for the guy that wants to be part of something bigger, part of the strategic place that we've built within Stigma Grow, that we can show that this is a profitable venture. Strong brand position. We're looking to build that. Obviously, we're building it with a bottom line. There's a lot of companies out there right now that are building brand position with only top line. Problem with that is that you've got nowhere to go. You're building your brand by either paying some of the retailers, you're building your brand by either dropping your pricing down to where you can't compete or make any money. There's no upswing. We're not going to see a huge increase in pricing on these things. It's still becoming a commodity. So you have to play the game safely, and we want to make sure that we're actually making money all the way through the value. How does this potential synergies? Public costs, if they're public. I've got 9 deals on my desk, guys and girls, 3 of which look fairly attractive. Again, running them to the ground is the next scenario. But what does that look like? Biomass savings. We're currently the 3rd largest buyer in Canada for biomass. We run a lot of product through. I was just visiting one of my farmers before we came here in the airport, and he's got 30 acres of product. We bought it all, and we did it last year as well. That yields to a lot of other companies that are buying smaller amounts. So we have, give or take, we're buying 5 cents a gram. These guys are buying at 10, 15 cents a gram. We have that buying power to produce those COGS that'll, yield a 30, 40, 50% decrease in their overall costs. Cross-branding between groups. As I said, Ontario and British Columbia do it very well as regulators. They really protect their own. They protect their own LPs within the provinces. Having that cross-branding activity would give us a strength in both provinces that we're really looking for. We currently have a national sales staff in place, and we have expansion room for more brands. Strengthening management teams and board members, that's always a good plus. Sometimes you have a really good public company entity or person and really doesn't know how to grow or doesn't know how to make a product. Or you have somebody that makes a really good product and doesn't have a clue how to run a company. I think that's where more of the synergies we're looking for, and strengthening some of our board members and some of our management team. And then international sales. The 2 or 3 targets I have do have GMP certification. It's something I'm very interested in, being able to sell internationally. And then again, when the States potentially does open up, we have that option as well. Timelines. We're looking to get 3 acquisitions done before our Q1 2025, which is this time next year. So that's our goal. If we get 2, we get 2. That's okay. We're not pushing this thing. We want to get, and honestly, if we get none, we're okay with that too. We want the right fit, right companies, right place, right timing. If it's not a right fit, we're not going to sacrifice going into negative margins again. Performance of some of the combined companies, what we're looking at, the ones that we do have currently, roughly our 2023 is going to be in that 34, 35 with a 3.5 bottom line, give or take. The next step up for us would be that 94 with a roughly 9 million bottom line. And then the third, by 2025, we're looking at 124 and 12 mil bottom line. What does that do for the market share? So currently we have 3.4% of the current market share in Canada. Doesn't sound like much, but the largest holder right now is just over 8%. I think these need to update a little bit, but just over 8% of current market share. So there's not a lot of companies that have 20, 30%. There's nobody holding that large amount. So this would push at 120, 125 top line would push us into either second or first, depending on their activities over the next year. Timing, federal legalization of the states. We know that's all coming. We have plans on being in the States Q2 fiscal next year. We've seen a 900% growth over the past 6 months with little to no IR or PR. We don't go out and push this stock huge. We are starting to now. Obviously, we're here. So Trevor and Paul are helping us with that. The pro forma company is the size of proven track record of profitability, and will be the first of its kind in Canada to be larger than 50 mil annual revenue and profitable. I think we're one of maybe 2 currently that are actually profitable in Canada today. So that model has played very well. Again, 35 mil bottom line of 3.5, and you know, roughly share price today is 25 cents. That pro forma entity should look and should lend pretty decently to about an 85-cent stock, if not higher. Obviously, forward-looking, future can't predict, but if we're doing the math and things cold currently the way they are, that's what we're hoping for. Current value proposition. The way we're sitting right now, our implied market value share is roughly 56 million, which would lend to about a 42-cent share price. Again, I think we're sitting at 25, so you know, you can decide whether we're undervalued or not by looking at some of our information on CDAR, but you know, we feel that we've got a good position within today's market. All right, thanks everybody. Sure appreciate it, and nice to be here.